AIM-listed Angus Energy has recently succeeded in raising just over £3 million in a placing which the company says will be used for working capital and acquisitions. It has operations that are onshore oil and gas projects here in the UK in Surrey and West Sussex, and the company is currently analysing results from Brockham. George Lucan is Managing Director. He joins us now. George, welcome.
Good morning, Jeremy.
Congratulations, first of all, on the placing. Explain more about what's happening here with this, because it brings £3 million onto the balance sheet, which at a company the size of Angus is quite a sizable amount of money.
Well, that's right. Broadly speaking, the use of funds is 1/3 for some work at Brockham, 1/3 for some work at Lidsey, 1/3 for some work at Brockham, and then general working capital, of course. The Brockham works everyone knows about. They're going on right now. We set out a very clear timetable. We're halfway through that process. That has been something for shareholders, I think, a disappointment. They haven't seen an immediate result. And I think that's been a question of expectation management by my predecessor. I think people were slightly expecting a result, a Boolean result, yes or no, gusher or duster in January. We encountered some water. We've been able to successfully isolate that high pressure water. But actually, with Brockham, as over at Horse Hill and Broadford Bridge, where UCOG works, we are dealing with an unconventional reservoir, the Kimmeridge clay. Kimmeridge is, of course, a source rock and, if you like, a provider for all sorts of reservoirs around the UK. But not many people have addressed it directly and successfully. And what we've learned from our competitors at UCOG is at this second stage, when we're trying to communicate with the reservoir itself, is the stage at which we must proceed most carefully and most intelligently. And as I say, I think there's been some miscommunication on timescale. We'll now take a pause with our partners, think about this next stage, and start bringing on equipment within the next, I suppose, 2 or 3 weeks to address this communication issue. Well, that is, at any rate, our intention.
Just want to get back to Brockham in just a minute. Just going back to the placing, is it all now over, or is it still some operations still to go?
No, the placing is now complete, so there's £3 million in the bank. What I've done is, and insisted on, is a small open offer to shareholders at the same price, and that's the period we're in now. And my reasoning is that there hasn't been an opportunity for shareholders to come in at the same level as placees at any time since listing. And regardless of where the price is right now, which is somewhat below that open offer price, I still think it's very important psychologically for shareholders that they have a board which understands that they should be given the opportunity to come in alongside larger placees. And that's something which we intend to do going forward, wherever it's possible. I think I use the word wherever timing is possible and where appetite will meet needs. So for me, regardless of the success or otherwise of the open offer, I'm very glad to have been able to make it to shareholders. What I'd like to say and add is you mentioned acquisitions here, and we have described in very outlined terms a potential acquisition we're working on now. And I say potential, but it's fair to say it's in the latter stages of documentation. I think we described it in the RNS as advanced stages. So it's one I'm very hopeful of concluding within a time frame which would be satisfactory to shareholders.
But we don't know any details on that yet. When are we going to know details? Is that coming soon along with everything else?
Along with the closure of the transaction. The second we do, we have a great array of wonderful detail. This asset, which I can talk about in outline again, has been around for 20 years. It was a considerable onshore gas asset. It's been very well managed. For the vendor, who is an enormous company, it's of very little interest at the tail end of its life. But for us, of course, where we work with much, much finer costs, it's a feast.
Do you think it's a potential game changer? As I say, I don't want to push you too far on that because I know you can't say too much about this new asset you're taking on, but is it a potential game changer more so than the existing assets?
Absolutely.
Okay.
Absolutely. Let me just say, we were able to say in the RNS that this was a field from which 67 billion cubic feet have been historically extracted. The peer-reviewed journal on the field suggested that was 60% of gas in place. We believe quite strongly we can get between 70 and 80%. If you do the sums on that, that is between another 11 and 22 billion cubic feet, which we're in for 51%. So take a midpoint, 8 billion cubic feet. If you do the sums, that is Angus's market cap today.
Right.
If we close this deal, this is not an exploration project. These were producing fields, a producing field with 7 sunk wells, cost paid, just capped up for the moment. All we have to do is reconnect the thing and keep it working. And it's a job we can do very cheaply and very well. And the vendor, it's below their threshold.
And the cost?
And the cost is, well, we get with the asset a contribution toward abandonment liability of £2 million. And that will cover, more than cover, our tail end liability, which is 51% of abandonment. We can use that £2 million right now to reconnect. So the idea is this asset, although isn't actually part of the fundraising, but it's the reason we bring this to shareholders. It's the reason we say, look, mate, we could double our market cap just on the back of this.
Okay, let me just quickly run through some of the other assets as well. We've spoken about Brockham. Holmwood, I'm interested in, Brockham, and of course you've also brought Lidsey onto the asset list as well recently.
Well, we've increased our share in Lidsey, that's right.
You've increased it.
Dori Amos has been disposing of some of its UK assets, and we were able to take Lidsey up to 80%, I think we are now. So
just to outline very briefly what you're doing in these other assets, because clearly you've got some exciting things potentially to come, and you just recently updated on Brockham, but just quickly summarise the other assets.
Well, on Holmwood, there's been a considerable delay. We're a very junior partner in Holmwood, but basically they ran into a planning permission issue and they're now looking for a new site. Meanwhile, I think UCOG has been increasing its share in the licence. We don't frankly see any news flow on Holmwood in the next 6 months. The most interesting one coming up is Brockham. And we hope to begin works there in the autumn, subject to all the regulatory approvals and planning approvals, but we're confident we should be able to get them.
And Quadrilla is the 56% owner on this, isn't it? Which, of course, is known for perhaps maybe all the wrong reasons in the press, which is a fracked well, isn't it, potentially?
Absolutely not, no.
So these are all conventional wells, all of them, the assets
absolutely.
that you've...
And there hasn't ever been any question of using hydraulic fracturing, as far as I know, in any of the wheeled assets.
Let's move on and take a look in some more detail about the cash burn, where you are in terms of projections and income and so forth. Obviously we can't talk about this new Northern asset you hope to be taking onto the books. But give us an outline of how long this 3 million is going to last and what investors should look for in terms of more possible placings or more money raising if you have to.
Right. The working capital provision we made covers us for a year period. So that's in that fundraising, whatever happens, pretty much. But we built into that some cash flow from Brockham, some cash flow from Brockham, and at the very, very tail end, this gas asset coming on stream. We've got a very high level of confidence about Brockham, and if we could have, we would have actually been pushing Brockham ahead first, if only just to get shareholders' confidence back up in a cash flow story here. That is slated, as I said, for August, September, and that should, together with the gas field when that comes on January, February, March, the following year, we would aim to be cash flow generating as a company. And no longer reliant on constant cash calls for shareholders. If Brockham comes good as well, then we're really in quite positive territory by the middle of next year, for certain. So on that front, what I hope we're achieving here is shifting a company which was pure exploration with consequent endless cash calls to one which has got a balance of production and I would hope no more than 40% exploration at any one time. With 60% production, we're covering costs and making some. And the target would be dividends for shareholders within 3 years. And I say that Not likely.
Okay, and those dividends coming through as a result of production benefits, or is it exiting the asset when you've got it up and running and you want to sell it on?
No, production benefits.
Right, okay, fine.
Yeah,
Okay,
from steady production. Now, initially, very, very small, but for me, a dividend is the best communication you can give to a shareholder. And it says thank you twice a year, and that's it.
Okay, you spoke very briefly about the share price. Let's bring it up because I think it says a lot about what's going on, in fact, what you were talking about here. And here we are now, not too far away from recent bottom here. This is February 2019, where we saw, I think, the stock have a 3p handle. It's now got a 4p handle, 4.1p a share. Just repeat what you said in terms of the context, in terms of the market capitalisation, where the business is going, the acquisition, and where the share price is.
Share price is. Well, actually, it would help if we step back a bit, because there's a number of shareholders who've said, looking back at December, well, what's happened here? And the answer is, we had a perfect storm, really. Last year we had some compliance and regulatory issues which resulted in our Chairman Jonathan Titwell stepping down.
Right.
That left a board with one executive director on it, which is a pretty shabby state of affairs, frankly. And don't get me wrong, Paul Vonk was a great CEO for the company, put together some great assets. But he was there alone, struggling away. He then ended up in a disagreement with shareholders toward the latter end of last year. He wasn't able to come to market with a regular fundraising, so he raised instead in January a very unsatisfactory convertible loan note. Ultimately, the dispute with shareholders grew so great that they requisitioned and they removed him from the post, hence I joined in February. That's an awful lot of hits for a company to take. And my immediate aim was to get a board back together again, a proper FD, a proper chair, a non-exec chairman who's got genuine experience, a technical director to actually stand by me when I make technical statements and make sure they're the right things to be saying, and above all, get the capital base right. Now, back in February, we just wanted to repay that convertible, because as you know, if you're on the downward trend, and we were then, converts are an extremely dangerous thing to have around you. When you're on the up, they're great.
Yeah, that's fine, yeah.
So that was the first point, to get that out of the way with. What we're doing here is setting out our plans for the year and getting adequate resource for this company for the year. And this is a point here. This deal we get as I said, for £1. We get a chunk of money to reconnect, and we believe that the value of the reserves will double our market cap from where it stands at present. So the share price, in our view, it's at 4p, should be at 8.
Yeah.
Just on the back of this successful closure of this deal. And I reiterate, we haven't closed it yet.
Sure.
But the purpose of resourcing a company is actually to open it up to opportunities like this. There's a lot of regulators and a lot of vendors who simply won't deal with you unless you're adequately resourced and you've got proper capital behind you. There's a lot of fly-by-night companies out there, and they've got wonderful licenses here, there and everywhere, but they've got 50 grand in the bank and they're going absolutely nowhere, and no one will talk to them, no one will deal with them. My aim was to get a proper board in place and proper capital in place. And then I believe on top of this structure, there's a lot more out there for a good company like Angus.
So you're looking for more acquisitions, that's what you're saying?
If we can get them for £1, yes, I am, Jeremy.
One final thing is, I'm interested in your background.
Yes.
New to the company, as you said you are, just been there 2 or 3 months or so. Are you a money man, or are you an oil and gas man, or where do you come from?
I was a money man originally. I did 10 years with a big investment bank. I did a whole variety of years in various forms of structured finance, project finance, some asset-backed finance, a lot of it energy-related, and then hedge funds for a while. Quite a monkey house there, as you'll be familiar with. Islamic finance even for a while. I turned toward the end of my 40s and I said, enough of the glass and metal boxes. I wanted to get out and get much more involved in some of the companies I've been looking at from a distance. And so I have a very small portfolio of non-exec directorships and Angus, which is taking up 110% of my time.
Well, look, we wish you well, and do come back to us when you know more about this asset that is still at the moment shrouded in some sort of a mystery that you're purchasing in Northern England, but we look forward to hearing that, and indeed potentially a move in the share price. That
Jeremy, thank you.
Thank you indeed for joining us. George Lucan is the Managing Director of Angus Energy.